OpenAI's IPO timing creates a $40 billion window for India's AI ambitions, if Delhi. That single number resets the tech playbook. The key question is not what happened, but what changes next for operators and users. We will map trigger, incentive shift, and downstream impact before the close. Wall Street sees a $150 to $200 billion company. India should see something completely different, an 18-month window that's closing faster than most people realize. Here's what's actually happening. When OpenAI goes public next year, it stops being a startup optimizing for capability and starts being a corporation optimizing for margins. That changes everything about who can build on top of it. Right now, India operates roughly 12,000 H100 equivalent GPUs across its cloud regions. That's 0.8% of global AI compute. OpenAI's post-IPO capital raise will fund 50,000 next-generation chips by late 2027. The gap doesn't stay the same. It widens exponentially. And once OpenAI and a handful of competitors control 60% or more of frontier training capacity, the cost of competing moves from expensive to impossible. But here's the part that actually matters for India: talent. Right now, over 4,200 Indian AI researchers working at US tech companies are actively considering coming home. That number exists because of visa programs, startup opportunities, and a genuine belief that India's AI moment is real. OpenAI's IPO changes the math. When those researchers get locked in with golden handcuffs, RSU vesting, lockup periods, this talent window closes for 2 to 3 years. We're in the last 6 to 9 months when a massive repatriation is actually possible. Then there's the dependency problem that nobody's comfortable discussing. About 70% of Indian AI startups are building on top of OpenAI or Anthropic APIs. That's not just a technical choice. It's a strategic vulnerability that becomes acute the moment these companies answer to quarterly earnings calls instead of founders. OpenAI raised prices on its flagship model by 15% in the last 6 months. That's the public version. The private version is that margins are being optimized, and inference costs are tracking the same curve as cloud costs did in 2015, they're going up, and they're going up fast. A cost that's 3 cents per thousand tokens today could be 8 cents by 2028. For price-sensitive Indian markets, that's a 2.6 times cost shock. It makes entire categories of applications uneconomical. Now, here's where this gets interesting. India has regulatory arbitrage still available. The EU is hammering out AI Act compliance. The US is debating Section 230 reform. India's Digital India Act remains in draft. Smart policy right now could position India as the Singapore of AI, stable regulation, strong IP protection, nimbler than the West. That regulatory opening exists for maybe another 12 to 18 months. After that, global standards harden and every country moves into compliance mode. What does winning actually look like? Not building Indian GPT-5. That's a decade-long moonshot that costs tens of billions and competes on exactly the metric where the US has unlimited capital. Winning looks like this: by September 2026, Gift City finalizes AI-specific regulations that give Indian startups acquisition currency before OpenAI expands directly into India. By March 2027, the India AI mission deploys 8,000 hours 100 seconds in regional clusters offering subsidized access to founders building models in Hindi, Tamil, Bengali, languages that OpenAI underserves and probably won't prioritize while chasing English language margins. By December 2027, 3 or 4 Indian LLMs achieve parity with GPT-4 on Indic language tasks. Not frontier research. Genuine API alternatives that Indian developers actually use. That scenario puts India in the AI middle power category. Not challenging the US for frontier research. Not trying to compete on raw capability. But controlling enough of the regional stack that dependency ends. Think South Korea in semiconductors, not TSMC, but not irrelevant. The pessimistic version plays out differently. Talent repatriation fizzles because U.S. companies counteroffer with IPO equity. India AI mission deployment drags into 2028 because of tender delays and infrastructure bottlenecks, the standard lifecycle for 10,000 crore government programs. Indian startups end up spending $4 to $6 billion annually on U.S. API calls by 2029 with zero domestic alternative at scale. When OpenAI faces a service disruption, geopolitical, technical, regulatory, 40% of India's digital economy has no plan B. China faced this exact decision point in 2019 and 2020. U.S. tech decoupling forced a choice: build domestic alternatives or accept dependency. DeepSeek, Baidu's Ernie, Alibaba's Qwen, those aren't world-beating models, but they're real options. China didn't have the luxury of staying comfortable. India does, which makes complacency more seductive and more dangerous. Here's the contrarian angle that matters: OpenAI's IPO might be less threatening than it appears. Public market scrutiny forces disclosure of energy costs, margin structure, geographic revenue concentration. That transparency creates openings for specialists, companies that fine-tune, build retrieval systems, optimize for local efficiency. The 80% of enterprise value doesn't come from frontier models. It comes from the work that happens after training. That's where smaller, cheaper, locally trained models actually outperform the giants. So the real question isn't whether India can build GPT-5. The real question is whether India chooses to be a commodity buyer or a commodity producer in the next 18 months. The infrastructure decisions, the talent decisions, the regulatory decisions made between now and December 2027 lock in a path. Missing this window doesn't mean losing an opportunity. It means accepting permanent dependency on AI infrastructure controlled by quarterly earnings pressures 8,000 miles away. That's not a prediction. That's a choice, and choices get made by inaction just as much as by action. OpenAI's IPO filing marks the moment when AI stops being a startup experiment and starts being a public company optimizing for margins. India has roughly 18 months to build sovereign AI infrastructure before capital markets cement a winner-takes-all structure. Right now, 70% of Indian AI startups depend on OpenAI APIs. Once that company is public, inference prices will rise, and dependency becomes permanent. The window for India to repatriate talent, deploy regional GPU clusters, and build credible Indic language alternatives closes fast, probably by late 2027. It's not about building Indian GPT-5. It's about whether India controls enough of its AI stack to avoid permanent dependency on quarterly earnings calls from Silicon Valley.